Welcome to this week's market drama. We'll begin with the S&P 500, which was up almost 6% for the week. It is now up 15% year to date. NASDAQ was also up 2.5%. It is now up 31.8%. So the S&P 500 has rallied stronger the last couple of weeks, but NASDAQ was already in a very strong position, right? Since it's up 32% for the year. Oil was also an important one to note. It fell 4% for the week. It is now down for the year, and that is good news for what we will see probably in headline inflation in the coming months, considering gasoline prices are affected by oil prices. So that's on what happened on the markets. It wasn't one particular headline that drove the action. I think it's a continuation of what we saw the prior week, which is stocks like this current environment of economy cooling off, but not in a recession, which will keep bringing inflation down, and therefore the Federal Reserve might be able to lower interest rates next year, right? That story kind of continues. I did want to take a minute here because there was some interesting research that came out by the Federal Reserve when it came to household balance sheets, right? Like how much, what they own and what they owe. And 3 weeks back, research came out showing that not surprisingly, the last 3 years, American households got richer, right? Driven by household prices as well as markets. So on what they own, prices went up. But also what the Federal Reserve Bank of New York research showed this past Wednesday is that households were also being able to reduce their debt, right? What they owed by refinancing their mortgage rates at pretty low interest rates, right? In the prior years. So 14 million households refinanced their mortgage, which reduced household debt by about $30 billion annually through 2021, right? So this is important to note because it does help explain why the consumer has been so resilient to higher interest rates. Now, it's not immune to it. For instance, delinquency rates are starting to go up for auto loans as well as for credit card debt. Nonetheless, I think the Fed has looked at this data and saying, okay, we're not going to start lowering interest rates because household was in a pretty good place heading into this year. Also, you add the fact that unemployment rate's still below 4%. It does kind of help explain a little bit of the story that we're in today. Next week, when it comes to data, we have core CPI data that will give us a sense of how inflation is looking on the consumer side. We also have core PPI data that gives us a picture of inflation, but more on the industrial side of the economy. And we also have retail sales to see how that consumer is holding up. That's it for this week. Stay tuned for next week.